Hi, my name's Donald Boyd. I'm the head of growth here at Azets, and today we've got a panel of experts to talk about the navigating the cost of business crisis. The budget that was in the autumn of last year was probably one of the most fundamentally difficult budgets for business in terms of its cost base for a good number of years. And the spring statement recently gave no respite there in terms of those measures. So today I'm joined with a panel of experts, and we're going to cover off corporation tax, the importance of having a trusted business advisor, and on the employment tax side of things as well. So welcome, Becky. From a corporation tax point of view, now Becky here is a corporate tax partner here in our Leeds office. So from a corporation tax point of view, what are you saying to your clients at the moment in terms of things you can potentially do?
Sure, yeah. I mean, what I would say, first of all, is really basic, but given the main rate of corporation tax is 25% for a lot of businesses, that's an increase we've seen in the last couple of years. Really, obviously, every single pound of tax relief that you can claim is saving you 25 pence. So really, really important and can make a massive difference. We've actually got a bit of a period of stability right now for corporate taxes, but we've got some key reliefs that have changed a lot. And I suppose today, just talking about some of those key ones. One is R&D tax relief. We've talked about a lot about that at Azets. We talked to our clients a lot about it. It's gone through a lot of change. We now have some stability in that regime, and it's hugely important, both for large businesses, but also for our SMEs. So worth looking at. I'll talk a bit later perhaps about what HMRC's approach on that is. The other key thing is capital expenditure. We've got lots of businesses who are investing in CapEx right now. And there's been some incentive around the spring statement and the budget around investment in CapEx and encouraging our businesses to be doing that. Again, tax relief can play its part there. So we've got a relatively stable regime again for capital allowances now. Full expensing. We've probably heard people talking about that phrase. It means that you can write off the cost of your CapEx in the year. Hugely important. And we still come across businesses who've perhaps looked at it, not looked at it for a few years, looked at it again. Again, I think, Fraser, you're going to talk about the importance of taking advice, and that's an area that it is just worth routinely having a look and seeing what you can claim. And then one other thing, without wanting to go into too much detail, is a regime called Patent Box. You might hear that as a business and think, well, I'm not necessarily innovative. I don't necessarily have loads of patents right now. But that gives access to a 10% rate of corporation tax. Yeah. So compared to 25%, 10% seems super attractive, and it can be. And we are encouraging businesses to take a look at that if they haven't already. It's probably in the slightly harder to access box than something like capital allowances, but still worth a look and worth a bit of time and speaking to your advisor about it. So they're the key things.
So very much in corporation tax, whilst the headlines might be as sensational as other areas, there's still a lot in the toolbox. There's a lot of tweaks and changes, the devil being in the detail.
Yeah.
Very much so. Patent Box has been around, but as you say, 25% of your profit is an awful lot to be paying away when there's a lot of reliefs out there.
Yeah, absolutely. And I think it's just staying ahead of those things, talking to your advisor about them. And then the other thing that we've seen some tweaks and some changes around is just quarterly payments for tax. Many businesses now are paying all of their corporation tax in their current accounting period. That's actually quite hard to keep on top of. Yeah. So just trying to make sure you're managing that as best you can. Interest rates where they are, HMRC are taking a higher interest rate on
huge cash flow impact as well, the quarterly payment side of things. Turn to Clair Williams, one of our head of employment taxes. Big changes in the budget in your side of things, 13.8% to 15% headline rate. There's a lot of things that businesses can still do to help mitigate some of these costs.
Yeah, there are. I think, for most businesses where they've got employees earning £9,100 per year, the main cost is actually going to be the reduction in the secondary threshold, because that's going to cost an extra £615 per employee per year. So things that we're speaking to businesses about at the moment is we've kind of come up with a 5-point plan, which is have a think about kind of your tax planning, especially if it's linked to NIC savings. So are you maximising your salary sacrifice opportunities? If you're in the hospitality sector, have you put in a trunk because you can save NIC on tips that are being paid to employees and things like that. Are you maximising what you can pay to employees in a tax-free way? So, for example, are you paying home working allowances? Can you offer canteen facilities for your employees? What about company-provided mobile phone? Because that you can give every employee a company mobile phone tax-free. Think about rewards and benefits packages. You can have flexible benefits packages. You can give access to supermarket discount schemes. All these kinds of things all help that employee engagement in a time when, it's really, really difficult to keep workforces and there's a lot of competition out there. Moving on from that, you've got your hiring strategies. Do you need that full-time employee? Flexible working, have you considered that? Is there any job sharing arrangements you can think of? What about apprentices? Are you optimising the use of apprentices that you're hiring, saving on the national minimum wage and national living wage increases? And then finally, things like employee share schemes. You can link them with strategic growth of the business and they can be linked to the future growth. So it's not everything in this year. Employees are then directly, earning from what you're doing with the business. So it links with exactly where you're trying to go in the business and can help save quite a lot of money. Obviously, they're not all suitable for every business, but we would recommend that businesses have a think about which ones are suitable to them and use them as best they can.
I think it's a fascinating area, the employment tax, because it's not just like navigating the cost of business crisis that we're talking about, but actually employee engagement is such a fundamental part of business these days, and it can be something as simple as, a shopping voucher or something like that. Bring that to life, because I think that's quite an interesting story. It's the minutiae, but sometimes these are the things that are quite important.
Yeah, so what happens there is the business will engage with a provider. We can obviously help identify who that provider might be, but those providers give access to platforms. So you might have your Tesco supermarket voucher sitting on the platform. The employee gives up £50 and they get £60 in return through the voucher scheme, things like that. So they're quite simple schemes, but the employer can help the employee basically have more net disposable income every month.
Yeah. You mentioned also hospitality there, and I've introduced Fraser Campbell, who's our head of accounts and business advisory services. And your DNA, and I know Fraser for years, is on trust and trusted business advisor. The hospitality sector have really lent on you, and I know you were telling me a story of one of your clients, and the impact of the recent budget.
Yeah, so the budget last autumn came on the back of, as we know, a huge period of price increases and general turbulence and uncertainty out there. Were we in a recession, not a recession? The Brexit issue as well, that coming home to roost, and the hospitality industry, they got to the budget and they felt that's another sucker punch to us. We're just coming out of all those cost increases we've had to absorb. We've just come out of the fact that our seasonal workforce can no longer easily go back and forward to Europe, and we've managed to survive that. And now we've got yet another cost we're going to have to absorb, which is the increased cost of employing people. Now, you think about some hospitality businesses that operate in that seasonal industry, particularly likes of London, likes of Edinburgh, likes of all the tourist hotspots. They need flexibility in the workforce, and these increases in employing people, the cost of bringing that threshold down by about half has just made that whole flexibility question a lot more expensive. I had one client who had calculated. Now I'll make these numbers up. So let's say they've got 5 units and they do quite well. They probably had their best year last year, made about £500,000 of profit, which is really good out of those units in what's been a really tough environment. They've calculated that with their current seasonality and workforce, half, if not more, of their profit would go in increased tax. Now, you talked about 25% being the tax rate on every pound. Well, actually, when it comes to employee-heavy industries like hospitality, half, if not more, of your profit. So what are they doing? Well, we sat down with them, and it's less about how you can't just reduce heads in a hospitality business. You got to think about how that impacts the service you're delivering. So think of more innovative ways of delivering that service. Do you move, for example, for your people out in the terrace to, self-serve high quality wine and these kind of, high-tech wine dispensers, that reduces maybe 2 or 3 heads. Do you go for more of a very high-class order at table service, or do you keep the full personal order? So it was really more about re-engineering the product that they were delivering, which then would have a knock-on impact how they dealt with headcount, particularly in the peak seasons where what they traditionally would do is throw bodies at the problem, whereas they've had to work far more forensically in working out what's just enough staff at what time for me to meet my projected demand. And that's not your typical accountancy work, that's not your tax work. That comes from really working with the business owners to understand what drives value in their business and how you can help them, logically analyse those various factors and come to a decision. So it's the kind of stuff that you and I get out of bed for in the morning. Well, it's great to do the accounts and the tax, but helping solve those really gnarly problems is something which is really, really, it's enjoyable, despite the circumstances that we find ourselves in.
Yeah, I mean, it's such a value proposition having that trusted business advisor, accounts and tax, the compliance side of the work that people traditionally think of as an accountant, but actually it's those fundamental things when you're talking about changing the way in which the outdoor service is done, in a terrace and things like that. These are the real things that we really love talking to our clients about. Becky, you talked more about the innovation tax relief. So going from one sector which is probably not that eligible for a lot of the innovations, although there have been some providers out there, as we know, that have pushed R&D tax relief into certain sectors, and innovative ways of creating vegan meals and things like that. So HMRC have really cracked down on that, and there's a lot more detail and complexity in the innovation taxes.
Yeah, and I think I was just listening to what you were saying, Fraser, about the importance of taking the right advice and people asking the right questions. I think one thing we're saying to businesses is sort of, if it looks too good to be true, then it probably is. And unfortunately, we're still in an environment where there are some schemes, as we would call them, out there. And I think under this pressure, business owners are probably looking at those and thinking, well, this looks great. It's going to save me. It's going to allow me to deduct something that I didn't know I could deduct. It's going to save me some cash tax, for example. It's going to help me with employees. There's quite a lot from an employment tax point of view that we come across. And it's that sniff test thing. And I think we would always say to our clients, if somebody phones you and offers you something that sounds too good to be true, pick up the phone to us and have a chat, because often those things are. But yeah, you're right. I mean, R&D has gone through a period of, there was genuine fraud in the system, and it's frustrating as a professional advisor who's trying to sort of use the rules that we've got in the right way to put proper claims together, that unfortunately that behaviour has made it more difficult for everybody. And I know, and we've talked about this before, that there are businesses out there with small claims that are genuinely doing research and development and should be able to claim the tax relief, that are just deciding it's too difficult, because we are in an environment with quite a lot of HMRC focus on it. But for the right, for the right activity, putting the claims together properly, doing all the, ticking all the boxes, doing it the right way, it's still there and it's still really valuable for some people. And you're right, I mean, sectors is important, because there are some sectors out there that just won't be able to access that relief, but there'll be other things they can look at. So.
And obviously these reliefs are available if you're making profit. Even if you're not making profit, there's a refund as well, because a lot of what you talk about is very relevant for profitable business. There's Clair, it hits every business. The employment taxes are.
There's a lot of focus on that 25% of corporation tax, but actually if you're not making profit, you're not paying it. Whereas to employ somebody, that cost is there regardless.
That NIC and the national minimum wage has been quite a fundamental blow there. But I think, as Becky's saying, there's plenty that we can do, Claire, in terms of in the corporation tax, but the employment tax side of things. You were telling me about pensions and putting pensions as a deduction through payroll. And tell me how that works.
Yeah, so that's something that most businesses would be able to do. It would be salary sacrifice scheme, so it's pension salary exchange. Every employee, or most employees, are required to be auto-enrolled into a pension scheme now, and have been for quite a long time. And ordinarily what happens is the pension contributions that the employee pays come from their net salary, so they've already suffered tax and NIC on that salary. The way that pension salary exchange works is that the contribution that the employee makes is coming from their gross salary. So they have a deduction in their pay in respect of that contribution, which means that they save tax and NIC in the payroll. Ordinarily, they would have got tax relief in the pension scheme. So overall, it's an NIC saving for both the employee and the employer. And that, for most businesses, that applies. The only kind of proviso that I'd put there is you cannot use it to take an employee's pay under the national minimum wage or national living wage. So going back to what I was saying about the hospitality sector, for example, there's a lot of people in that sector that are on national minimum wage. So it's not even something that generally helps out that sector. So there are some sectors that can't access it, or they might only be able to access it for a proportion.
You were telling me
staff.
an average business with maybe 30 employees, that's above national minimum wage, it's tens of thousands of pounds.
It can be, yeah. It depends what people are paid, and it depends what the pension contributions are, but the savings can soon add up. And as I say, it's both an employer and an employee saving. So yeah, it can be quite substantial quite quickly. And once you put that in place, it continues over kind of the forthcoming years as well. So assuming HMRC don't make any changes, that's something that once you've done it, it's there for the duration.
And it's staying on top of these changes that, the trusted business advisor has to be well aware of. We've got our tax experts here, but we've got someone in that kind of daily contact almost with our clients.
Yeah, I think for me, Don, the last few months, I almost hark back to the good old days of 2008, 2009, where all we had was a funding crisis and a little recession, whereas we seem to be, we're now moving into a different world where global trade has kind of turned on its head. So all of that uncertainty of business environment is really difficult to navigate. And one of the things that I sometimes are staggered by is the lack of investment business owners put into their own systems and their not just IT for IT's sake, but the actual processes and how they operate their businesses. Because now it's never been more important to know where you are today and where you're going to think you are going to be tomorrow in order to make those decisions, as the whole world of uncertainty is out there. You can only take action on what you can control, and you need really good quality data and information to make the right decisions. So, and it's never been easier to access high quality management information than it has today. I mean, the world of cloud is almost passé. We're into AI now. It's never been easier to get that quality information. But I sometimes find it difficult because your owner managed business is running so fast, they find it difficult to stop and just invest that little bit of time to put in place those better systems, better information, and then work on the businesses to being constantly in the business. And that's when you can have those wider, deeper conversations about how you put more resilience through your plans and navigate this really uncertain environment that we're in. But in this day and age, I'm so surprised how that system investment always comes last. And we're still dealing with out-of-date information.
Which it should certainly become as first, because effectively what Becky was talking about, the expensing regime.
Yeah.
So making a capital expense decision, investment, the tax regime's there. Absolutely. But you need the information to make that sort of decision.
If you're going to write a cheque or take on a debt for £500,000 for a new machine, what impact's that got on your cash flow? What impact will that have on your productivity and your profitability before you actually make that decision? You don't just, well, it's great to save 25p for every pound. You've got to be able to afford the pound first off.
Yeah, and it's a scenario analysis, because you suddenly get a change in employer national insurance. What does that then impact? And if you've got the information at your fingertips as well.
I think the other point you just made is the uncertainty piece. There's so much noise, isn't there? And I think what we find where we can add quite a lot of value is just, you can get blinded by the tax rules because they're really complicated. And even for tax advisors, there's complexity. There's what we need to do is help people go, well, actually, there's 2 or 3 things looking at your business and the tax that you're paying and the employees that you've got that will make the most difference. Salary exchange is quite often one of them. Capital allowances might be another, but just helping the prioritisation piece. Because otherwise you're in danger of doing nothing because it's too complicated and it's changing all the time.
Absolutely.
So that's sort of our job, I think.
But it's having that trusted relationship that Fraser talks about, so that you as tax experts know the business. So
and also we might well say, well, you could eke out a little bit here. It's just not worth the effort and investment.
Exactly.
It's not worth it.
So don't let the tax drive what you should be doing in the business.
Exactly. You mentioned patent box. What type of businesses are you seeing that are taking that advantage of that?
Yeah, I mean, it's historically often been the businesses that are also claiming R&D, because usually when you can patent something, it's because you've done something innovative. There was a period a few years ago when Patent Box first came in, when there was quite a lot of activity from tax advisors helping businesses gain patents, which sounds bizarre. It's not really what we do, but working with patent lawyers who can do that. I think that's sort of dropped off a bit, which is a bit surprising.
Because it's a reduced rate, isn't it?
It's 10%.
10%.
And I think there was a nervousness that it was going to go. We've now got certainty for this Parliament that it will stay, which came out in the corporate tax roadmap that we saw last year. So that's sort of, for me, it's going to be here for sufficient time to invest. It does need a bit of investment, invest a bit of time in it. And so I think what we've found is there's a bit of a sales gap in it somehow. There's a nervousness that people don't want to patent something because of the commerciality concerns around if we patent it, then we have to provide quite a lot of information about what we're doing in order to patent something. Obviously it then protects that, but then when that patent's expired, it's out there. So what we tend to do is try and facilitate conversations around, actually, are there small things that you're doing that actually drive quite a bit of margin that you could patent, that you're not necessarily commercially sensitive about, but give you access to a patent, gets you into
things like
to the
process
patent box.
and things like
process patents can be part of it, yeah. And there's the if you read about Patent Box, there's always the examples of a tiny little piece of a car means that the cells are generated from that car are all within the Patent Box. It's not quite as simple as that, but that's the aim. Is it's there to generate behaviour that the government want to encourage. Same as R&D, it's a behavioural tax. So, government are saying we want innovative businesses to be in the UK. Patent Box is one of the sort of limbs of that approach, really.
Yeah, and it's been that trusted business advisor, knowing what's going on in policy as well. We can't predict the future and everything, but, at least having a bit of a deep understanding of that detail, that is what's the latest
you
music.
can read the narrative around where, all of the autumn statement noise around tax changes. If you actually read the narrative around investment, it's pretty clear where government is trying to take us as a country. So it's only, there's a lag probably in terms of where the tax policy will follow, but it will drive there, and it is still around innovation. It's still around investing for growth. Yeah. And it's still around attracting business to the UK. Yeah. So you sort of hope the things that are doing that are going to stay, and we're going to get more of them. So. Yeah,
but it's having your finger in the pulse, because Claire, in your world, the payrolling of benefits, that's suddenly been a bit of a U-turn, so tell us a little bit about that and what you and your team were.
Yeah, payrolling of benefits in kind was going to become mandatory from April 2027. So we've been helping some employers with going early and voluntarily payrolling benefits in kind. But what that means is that you're reporting the tax that's due on benefits in real time. It is one of those things, though, where I think where people have fairly simple benefits reporting, so if it's for company cars, for example, or private medical benefits, we would still be encouraging them to start payrolling the benefits from the next tax year, because it just makes it easier for employees to understand, and it means that all of the tax is paid, done and dusted, takes away the fun P11D process at the end of the year. And it means that you're kind of in the regime before it becomes compulsory in April 2027, when I expect mayhem, if I'm completely honest with you. So we would still encourage employers to consider payrolling from
Go
April.
early is really what your view is. Certainly, Fraser and I are old enough to remember the piles of the paper P11Ds around the office. It was and it coincided with the holiday period as well, so it was always a
I haven't had a holiday in July for a long time. Let's put it that way.
You're delivering the car benefit, bad news to the client or whatever that's maybe not had their code adjusted throughout the year.
So. I mean, I'm saying where you've got fairly simple P11Ds go early. I think, if you've got a complex workforce, globally mobile employees, that kind of thing, or if you've got loans, for example, you might choose not to, because the reason it's been delayed is because systems are not ready for it. HMRC's guidance isn't ready for it. But for the more kind of straightforward benefits, there's no reason not to do it.
Yeah. So, Fraser, you were telling me earlier, some of the clients that are struggling, they really have to engage and kind of understand what's going on. Yes. And fundamentally, you mentioned it earlier, the management information is still quite not there in a lot of business at the moment.
Yeah, I mean, I think, again, coming back to the fundamentals, when the world is uncertain, you need to have the right information at the right time to make the right decisions. One thing that I've heard said is, if you really want to run a successful business, run it as if you're going to be selling it tomorrow. Now, that's quite a shorthand way of saying, have a strategy. Yeah. What is your strategy? Take into account the uncertainties that are out there, but where do you want to be in the next 5 years? And what are the concrete 4 or 5 areas of your business that you need to focus on in order to deliver that strategy? Now, in order to do that and implement whatever actions you're saying, you're going to need a decent management team. You're going to need a decent production engine, whatever it is you produce, whether it's a hospitality experience or whether it's high-tech AI-driven software. You need that really efficient production engine. So you need somebody managing that and have the right infrastructure. But crucially, you need the reporting systems that are going to tell you where things are starting to go wrong or where things are going well. So you can do more of the well and fix the wrong. And that kind of attitude of always looking for that extra 0.5%, 1%, you can only start doing that once you've got a plan and you've got a team and you've got the ability to measure how that plan and that team's doing. So it's not just about the systems, it is wider than that. And that's what myself and my colleagues, yourself included, we enjoy having those conversations with clients over years. It's fun. That's where the fun comes into it.
We're not just bean counters, exactly. We're not sitting counting our beans all day.
But you've helped a business that's been in a real hole, and they've come out and they've turned around and they're now successful. There's nothing more rewarding than that.
Yeah. Becky, what sectors are you seeing that's doing well at the moment, that maybe need more of that saving of the 25%, those that are maybe into the quarterly payment regime?
All sorts. It's really hard to pull out sectors, and I think what we tend to see the sectors that are struggling probably is, they tend to have our focus sometimes, because like you say, we're trying to help them turn that corner. But there's some fantastic businesses out there. We deal a lot in this region and Azets nationally with manufacturing of all shapes and sizes, and I think we continue to see that doing really well. Some challenges coming out of COVID. Some businesses thrived in COVID and are now struggling because that demand and that boom for whatever they produce isn't
Are these
there.
fundamentally owner-managed businesses that you're talking about?
Yeah, lots of them.
Family businesses?
Yeah, lots of them. Yeah, absolutely. And I think the trend that we've seen, particularly here in our region, is family businesses that have got famous and done well from one thing and are now really diversifying. So they're seeing sort of multiple strands of all the things we've talked about. So they might still have that core manufacturing base, but they've also got some land and property, and they've also diversified into hospitality, and they're using their land in a different way, or they're suddenly into property development. And that brings its real challenges, because you've suddenly got multiple sectors
and
to think about.
Tax, maybe not for
and
inheritance tax. Let's not go there.
Yeah. So that keeps our life interesting and keeps their lives interesting too.
Yeah.
Multiple generational businesses taking over different bits of it. So
Clair, I was reading there's a real drive in the HMRC to tighten up in compliance. Probably 5,000 new officers that are getting diverted your way. Now, again, I'm old enough to remember the good old PAYE audit. Which seemed to have disappeared of late. Do you see that coming back?
We've definitely seen more inquiries open, but it's not only inquiries, it'll be things like nudge letters. So we're seeing nudge letters across kind of national...
What's a nudge letter? So maybe tell us.
A nudge letter is basically HMRC writes out to people. It could be that they have an industry focus or geographical focus, something like that. But they'll write out and say, you might want to consider whether you're paying all your employees at national minimum wage. Basically, what they want you to do is go and self-assess and go to them to advise whether you have maybe not quite been fully compliant. The problem is with the nudge letters, if you don't respond to them, you then get the second letter. And often that turns into an inquiry at some point. So if you get a nudge letter, we always recommend responding to them. Or at least, considering whether it is an issue first and responding to them. Also, tax investigations service, if anybody has that. If you get a nudge letter, for your claim to be valid in future, you will need to have dealt with the nudge letter as well. So that's something worth bearing in mind. But we're definitely seeing activity increasing generally across things like off-payroll working, national minimum wage, construction industry scheme inquiries, and then just kind of generally employer compliance reviews. And I believe that's the same across VAT teams, corporate tax teams.
Yeah, very consistent.
Yeah.
I think one thing worth saying is we've got a team of tax dispute specialists at Azets, and I think many of them have come out of HMRC and have sort of been on, seen
Absolutely.
how HMRC systems have evolved. And I think that nudge letter process is a great example of HMRC's data being so much better than we probably expect
They're using
it
AI
to be.
too, aren't they?
And their systems talking to each other really well. So often those nudge letters are being issued with some information that a business probably needs to think, well, actually, I'm getting this for a reason. And so this piece about should I respond? Do I need to? We need some careful thought. Yeah. And often it can be a result. Certainly, national minimum wage can be a result of whistleblowing hotlines, that sort of thing.
Yeah.
So
Absolutely.
And I think we're finding that they're actually more joined up as well in the way that they're approaching them. So they may contact somebody about an employer compliance matter, but then you find that a short while after that you'll get a VAT query. And it seems that they are kind of opening it up across all of the taxes.
And that's really
more
good,
often.
isn't it? Like, so as taxpayers, you want HMRC to be effective and efficient and joined up.
Yeah.
Because it frustrates us as advisors
Yeah.
when we don't see that. So actually, that's all good news that we're investing in.
Yeah, but helping the
better
clients
quality.
with that, obviously the fees can mount up, but there's insurance there that a
Yeah.
lot of our clients take.
Yeah.
You
We
deal with
offer.
that, don't you?
We do. We offer a fee protection scheme. It's with a third party provider. Most accountancy firms will have something similar in place, and there's been periods over the last decade when lots of businesses might have thought that's an overhead I can turn off because HMRC activity was quite low. I think that's come full circle.
There's definitely been a shift, hasn't there?
Yeah, there has, and and that means the cost of that sort of cover has gone up a little bit. But I think what we would say is, the cost of dealing with an HMRC inquiry, both the professional fees that sort of insurance covers, and the management time that it takes dealing with it. The cost of an annual scheme are dwarfed by
absolutely
by the cost of dealing.
Yeah, I mean, the absolute vast majority of business owners out there want to do the right thing. The problem is the tax legislation, regulation is so
complicated.
complex. And you're absolutely right. It's not just the cost of professional fees dealing with that kind of investigation. It's the disruption it puts into the business as well.
And the stress.
And I was about to say the stress. I've seen some really difficult times in the past where at least knowing that your accountant, your advisor, your tax advisor's got your back, it reduces that stress, and not having to worry about how much it's going to cost again helps reduce that stress.
Yeah.
And you said something before about operate the business as if you're going to sell it tomorrow.
Yeah.
That the point I would always make is if you find issues, tax issues particularly, don't brush them under the carpet.
Absolutely.
We would
You've gotta
always
deal with
say,
them.
come and speak to us, get it out in the open, deal with it. What we tend to find actually a very pragmatic approach from HMRC, where businesses are coming to them to say, I've tried to get this right and I haven't, and here's what I want to do about it. That part of HMRC works very well.
Yeah. I think on the penalties side as well, if you go to HMRC unprompted with a disclosure, you generally find that penalties are much less, often zero, whereas if they've approached you, it's a lot harder to kind of get the penalties reduced.
Yeah, and certainly in the past when I've been involved in some due diligence, you found that a £10,000 one-off 1 year issue can actually mount up to a six-figure issue.
Yeah.
When you're talking 6 years interest and penalties, and you're then into potentially price chip, retention
We've seen
and all
deals
that.
fall over because of unresolved HMRC
Yeah, exactly.
inquiries effectively.
So I think Fraser's advice about, look after yourself as if you're going to sell the business tomorrow, that you've got a very clean situation, or those areas that are slightly shades of grey, and a lot of it is in the employment tax side of things, the good old IR35, the celebrities that have their limited companies for presenting
And
on
that is
TV.
particularly complex. I mean, the cases that have been taken to court on that, I look at it and think, I think it's going to go that way based on the ones that have gone before, and then there'll be some slight detail in it that turns it the other way, and it's really, really hard to judge, and you can understand why businesses struggle with it. But on things like that, it's about taking reasonable care. It's about demonstrating that you've considered it for your business, and the reason that you've come to the decision you have is based on evidence that you've looked at, and that also helps in a case if it is under query.
The HMR, do you think they target these celebrities with that IR35 to grab the headlines? Or
I
is
would
it,
imagine there's a little bit of that in it.
Yeah.
You know, if they can make a show out of somebody, then why wouldn't they?
Absolutely, you know, because it's been.
But I mean, in all honesty, they do target other businesses as well. They're just the ones that people pay a bit more interest to, I think.
Right, that's fine. Well, listen, thanks very much today, guys. It's been great having the experts here. I think it fundamentally shows what Azets is all about. You know, we really want to be the trusted business advisor. It's not just a bean counter, but you can see the depth of expertise that we've gone from, you know, gifts to employees right through to patent box and right through M&A tax and everything else today. And the getting your MI straight as well is one thing that really came out there, Fraser, as well. So thanks very much, guys, for coming in. I've really enjoyed that. That was great.
Thanks, Donald.
Thank you.
Okay.
Thank you.